It is expected that Destiny Tech 100 will offer up to another $1 billion of shares. And the author of this piece, Jack Shannon, whose picture you can see here, that's him here. He either works for Morningstar or writes for them. He's positing, or rather advising, that investors should ignore that and remain on the sidelines, and went on to note that closed-end funds, which is what Destiny Tech 100 is, have unique risks, which is namely their tendency to trade at premiums and discounts to the underlying portfolio's value, and couple that with the fact that its holdings are illiquid, hard to price securities, and Destiny Tech's massive premium represents a unique opportunity for some investors to enrich themselves at the expense of others. And then went on to write down here that DXY's net asset value premium is insane. Net asset value, you can find the definition when you read this piece above. Okay, so as it concerns the company's disclosures with the SEC, it held roughly $53 million worth of private company shares as of December of last year. Last year was 2023. When you subtract its roughly $1 million in liabilities, it leaves about $52 million in net assets. That corresponds to a roughly $4.84 per share net asset value. Okay, while marketed as owning 100 top technology companies, it owns fewer than 25, and most of them have been substantially written down in the past 3 years, as shown in the chart below. Okay, only one holdings, SpaceX has seen a gain since the fund first bought it. More than half the portfolio's holdings are down more than 30% since they were first purchased. More than a third are down more than 50%. And he went on to write that a fund with a track record like this would normally struggle to attract assets from its inception in May of 2022 through December of last year. It lost a cumulative 23.2%, compared with a gain of 19.5% for the S&P 500. Most investors aren't beating down the doors of public equity funds who trail their own index by more than 40% in less than 2 years. Yeah, that is exactly what investors are doing here, according to him. So okay, do we bother reading further? Okay, so you find the link to this piece, and read up and digest for yourselves. So if we have to look at what's going on, obviously it hasn't been around for a long time. It just started trading publicly as of the 26th of Tuesday, the 26th of March. Okay, so there isn't enough data there, even though we have projections that its 10-day moving average is going to decline. It's going to drop to around 43 points. It's currently trading at $50.28, and this is projected to retrace all the way down to $43.6 come Tuesday, the 23rd of April. So, but in as much as the fundamentals don't add up, don't sound wise, it doesn't sound wise to get involved with DXY stock. Technically, as things stand right now, there is a reversal signal that is in effect. It's currently being flashed. Simply because the stock is trading at $32.46, and its 10-day moving average is trading at let's get it. It's trading at, I got it earlier on. It's currently at $50.28. We can actually validate that. The 10-day moving average is trading at $50.06. So statistically, probably the probability that a reversal will occur is there statistically. It doesn't mean that it will occur. The stock has it's just a further validation that of what has happened. Volatility was there. So you can see that spike all the way to $100 or thereabouts, 99.94 and then a plunge again just in a few sessions all the way down to 30.17. So the 10-day moving average hasn't had enough time to catch up with all of these things. So statistically, a rebound is being flashed. A rebound is being signaled. Will it happen? It may happen. So within all of these things, you might get a better picture of what is going on if you look at the 45-minute chart, and then you can see that yes, there is a consolidation within all of those, especially of late, more a consolidation, with a bias to the downside, and we can actually see that I think it's 21 period moving average is has continued to be the primary supply line. So fundamentally things don't look doesn't sound wise to really get involved with DXYZ, but technically it is highly risky, and there might be opportunities to get involved in volatility. So just continue to observe it. Just be really careful, really careful, really careful. This stock can really destroy your portfolio, and when it's going to come back, we don't exactly know. As you have actually seen, fundamentally, the only promising assets they're holding is SpaceX. Currently valued at $200 billion or thereabout. So in future, when things good, in future when it becomes the stock or SpaceX goes public, and the shares are more liquid, then who knows, DXYZ might do well. But regardless of all of those fundamentals behind DXYZ, like I said earlier on, the technically, there are opportunities there as well. There are opportunities. It's highly volatile, and some days there will be spikes, some days there will be retracements, and unfortunately it's also not optionable, so you really can't there are opportunities for you to balance things out there in terms of trades is also limited, but the higher the risk, the greater the rewards. So have a look and decide for yourself if it's worth getting involved with, and see what you make of it. I'll definitely continue to update you. Thank you very much for watching this video.